All right. All right. So welcome back. Another HPT live webinar. We're going to be breaking down week ending in 8/23. Really good week. I love looking at this chart right here. This chart right here means so much to me, right? This is 1 hour time frame, right? Very simple, right? But this tells us so much, and it's so important to be able to see this in this fashion, right? You got a resistance here at 555. And then last Friday, we kind of closed right on it. And then Monday morning, we found buying acceptance here, right? So that was that was the beginning of the week. That's where we started the week. And let's break right into Monday. So obviously, Monday morning was if I could identify strength buying acceptance above 555, I was very bullish, right? I was very bullish, and I had upside targets of, let me whip out the daily here real quick. Always grab your upside targets from the daily. All right, so my first target was right here. Bing. Second target is going to be just the open of this candle. Right, we just grab pint numbers from previous days. That's it. Like that's literally it. And the targets may seem far away, right? But it's crazy. Look at that. It literally hit both of those targets perfectly. And then I ended up having another target at like 559.30 that it literally hit, right? So just because it seems far away, don't let that keep you from putting on trades, right? Because just because it doesn't seem feasible in your mind doesn't mean it's not feasible. So the morning bell went off, and Monday morning I'm looking for buying acceptance at this level, above this level, to target 55653, right? So my first trade of the week, I ended up going long here, and very simple, simple strategy. This strategy works amazing, right? This trade didn't go in my favor, right? But at the same time, I didn't allow that to damper how I feel about the strategy, right? This is my edge. This is me acting on it, right? So when I long this, I want to put my stop below open print, right? So my stop's right down there, maybe right below this candle, and I get stopped out of the trade. Boom, right? And if you look, look at how price comes down, tags that 50, right? Beautiful little liquidity grab right here, which really fueled the move back up to 55650, right? So I didn't catch any of this. Went long, got stomped out. There was definitely some ways I could have gotten into that, right? But at the same time, if you take a losing trade, it's very important to not feel pressure to get back in the market, right? Like if your edge is there, of course, take it, right? But like at the same time, if you have a history of like revenge trading, or you just want to maybe wait until later in the day, like that's completely fine. Like that's where I was, right? So I didn't take a trade. I remained patient. So then, let me get rid of this. So I'm just watching trend, right? Like I'm just watching to see how buyers are holding trend, right? We still have this upside target of 55845, right? So in my mind, if we're holding 555, I'm bullish, right? I do not want to short into 555, especially when the 1 hour time frame looks like this, right? So when that 1 hour time frame is, what was it, Monday right here, look at the 9D EMA, right? Like it's hugging price. That's another reason I didn't want to chase longs just yet, right? And then when you see this sell-off right here at 1155, look at it on the 1 hour time frame and tell me it doesn't make perfect sense. You know what I'm saying? Like, and that's where it's so important to use larger time frames. Larger time frames are my best friend, dude. Like they are every single trade I take, I look at the 1 hour before I take it. Right? Because if the 1 hour time frame looks like this, and we're getting a pullback right here on the 5 minute, that could, if I'm not looking at the 1 hour time frame, that right there, that's what we call a bear 180, right? And that's pretty much opening above the 9 and closing below the 20. That's very bearish, right? So like you know, that could be like a signal to start possibly thinking bearish. But whip out that 1 hour. Nah, dude, that's a liquidity grab. That's
Retest.
yes, exactly that too.
Exactly.
That's a perfect little bounce off previous high of day, etc. Right? So once we got that little liquidity grab, I'm like, okay, let's see how price reacts up here to the highs. So we ended up getting a nice rip into the highs, a nice bounce off the cloud, right? Where I ended up getting in the market long. Hold on, let me get to this. On this candle right here. So I'm playing into the highs here. And what I'm doing is I'm taking this long, right? And like the old Josh would be like, dude, what are you doing, right? You're longing, right, at you know, where this seller was. But like in my mind, I'm going, dude, how strong is that seller, right? Like what if price breaks out past that? Right? What if these sellers can't hold? I mean, there was no bearish structure on the way down. Buyers soaked that little grab up very quick. So we got a really nice move here where I exited about 90. I think it was like 80% of my position up here, and then I left a runner, and this thing just kept holding the cloud, right? And this is one thing that the EMA cloud has done for me, and I'm sure you guys see it with Darren too, right? And most traders on the team is like, until this cloud breaks, right? Like you can stay in these and capture beautiful trending moves where you know what I mean? Your last contract will end up making more money than, you know, your first, you know, couple contracts that you scale out of, right? So, is a really nice push right there, right into 558.45.
On the hourly, I'm still experimenting with defining like what I need to see on the hourly.
Yeah.
As confirmation to enter. It used to be, if the cloud's green on the hourly, I'll never go short.
Yeah.
But I'm also paying attention to like the relationship with the cloud on the hourly. So like it was green for majority of the week, but every time a red candle would form on the hourly that would close below the cloud, I'd interpret that as bullish conditions weakening, and then I'd entertain shorts.
Yeah.
I wouldn't immediately go short, but
right.
I'd be more open to shorts.
Right.
But like what you said, for that specific trade, it wasn't even like it whipped off the top of the green cloud. Like you really wouldn't want to go short when it's being defended that strongly on a higher time frame.
Yeah. And what I like what you're doing, Reish, is you're building your own relationship here with the moving averages and price. And that is going to serve you so well. Because, like, I'll never forget when I started using moving averages, right? Like, they were on my chart for so long. And it was like, okay, like, cool, you know, yeah, it's trending up, right? But, like, when you start to identify the extensions on the 1 hour, right? And then you go, okay, you use that context, be like, okay, yeah, the cloud is green, kind of like Friday, where we shorted that green cloud, but we were extremely extended from the 1 hour 9, right? Like, and that's where that 9 DEMA comes in big for me, right? Because like when we get extended from this blue line right here, I don't care if it's a 5 minute, I don't care if it's a 1 hour, that thing's coming back. You know what I mean? Like, and that's just something I've, you know, built over time, like building that understanding with that moving average, right? So like, and everybody's different, right? Some people use the 9, some people use the 5, some people use the 50, some people use the 200, right? Like there's so many different moving averages, right? It's not like, oh, the 9's the only way to go, right? No, it's like, if you continue to dig into that information, you're going to find exactly what you're looking for. And it's going to serve you big time. Big time. It's weird. It's like, you know, especially in trending days. Like at this point, if we're holding 555 and I have an upside target of 558.50, and the market looks something like this, in my mind, I'm like, all right, I know by the end of the day, there's an 80% chance we're gonna hit target, right? The imbalance is gonna happen, right? From critical level to critical level, there's like an 88% chance that's gonna happen. So I may not know how it's going to happen, but how can I entertain it? How can I get in it with low risk? And, where is everybody else stomping out that could help me capitalize on a move up, right? So that's kind of how I try to look at it right there. So that was Monday. Monday was really cool. Tuesday was even better. Tuesday, let's break into this. So Tuesday, critical level I was watching was previous day high. 55845 played a pretty big role too, but I'm just gonna map out here PDH, which was end of day, right? It was very close to end of day, so we really only need one of these. PDH. Okay, go like this. Boom. Okay, so now, right? Things are bullish. Let me whip out that 1 hour again. And let's do some targets here. So let me whip out the daily. Market looks like this. What day are we talking about? Right here. Okay. Okay, so I have this level right here. Once again, pulling this straight from the daily time frame. This level, 563.7. This, I'm going to make it red, right? Because it's definitely a supply. But notice the gap above it, right? There is a gap in price on the daily time frame above this level. This is very important. So any acceptance above 563.7, I'm long targeting all-time high. But if we get no acceptance at this level, this is a very important level. This isn't a level you want to long into, at least I don't, right? Like, I would rather wait to see what happens at this level and then make my move, right? So price is doing its thing. We have previous day high. So this is obviously a sweet spot, right? PDH to 563.7. And if buyers lose this sweet spot, I'm looking for shorts targeting 55845, and then down below, right? So that was my initial bullish and bearish scenario. So you can see price opens up. I'm gonna whip out the 2 minute for this one. Price rallies in the morning, right? Just kind of cooks. Very nice structure here in the morning off the 50, off PDH. I did not long this, right? Because I didn't want to long into 563.7. I don't fault anyone that did, right? This would not have been a bad trade. It was actually a phenomenal long. But I wasn't able to get it. So, much like Friday here, you see we get this large selling out of this level, and then price comes up to this level. We get a really nice green bar right here that's ignored, right? So that's, shout out to Todd right there. That is the 2 minute scalping strategy, right? The green bar ignored. You take the short play, boom, right? That's what we did Friday. I did not short the market right there though. I didn't, because I didn't want to play with this 560.37 level, and that's completely okay. Like, if you got a level that you don't want to initially play with, don't play with it. Just wait to see how price reacts to it, right? Because once again, the market imbalance is going to happen on the daily time frame, right? So you don't necessarily need to play with setups that don't serve you, right? Like, if you don't like the setup, if you feel uncomfortable, right? If you don't like it, don't trade it. But at the same time, you need to trade something, right? So be like, which are the best ones, right? Don't just be like, oh, I'm not gonna, ever, I'm just only gonna watch, right? Like, no, dude, like, what are the best ones? You need to pinpoint it. You need to go through your data. You need to go through your trading log. You need to figure out which trades best serve you, and then integrate that with price action, right? So we sell off, and now I'm like, if buyers lose PDH, I'm getting in this short, targeting 55845. Right, so we sell off very strong. You can see this is the 2 minute. I do not trade the 1 minute, right? But I want to show you guys what this did look like on the 1 minute. Because I did get in this trade very quickly. Hold on, time frame. And I just want to show you guys, right? It doesn't matter the time frame. The principles always apply, right? So look at here off PDH. We rip down, we come up, we tag PDH. I'm in this short, right? playing into open print, playing into 55845, right? So we ripped down below. All right, now I'm gonna go back to the 2 minute. I just want to show you guys that quick little retest right there. And now at this point, I mean, in a way, I did feel kind of like I was kind of rushing the gun here, only because we were starting to get a little extended on the 5 minute time frame from the moving averages, but my entry up at PDH, right, like right here is where I ended up getting in the market. We were pretty close to the 9. Once we fell below open print, you can see here. Once that 9 caught up, right, we fell below open print, we consolidated, the 9 caught up, and then the sell-off happened, right, where I then took profits right here, and then I took more profits right here, right? So then I was completely out of my position. Now, what I want to show you here is what it looked like on the 1 hour, right? Because this pullback made complete sense looking at the 1 hour time frame, right? So what was this? This was Tuesday, yeah, right here. So on the 1 hour time frame, you can see here price got pretty extended from that blue line, right? Like that blue line was up here and it was from the 50, right? Now, anytime I'm getting extended from that blue line on the 1 hour, pullbacks make sense. So I'm usually looking to exit my position fully before the pullback, right? So using that 1 hour, right? Because now in my mind, like, hold on, let me whip it out like this. When price looks like this, look how far away that blue line is from price all the way down here, right? We are, what is this, $2 away, about $1.70 away from that blue line, right? That's $1.70 pullback, potentially. So in my mind, I want to take my profits and then go, okay, if and when price comes back up to maybe low of day, maybe open print, then I'll look to get back into the market. So, okay, just making sure. Okay, I'm good. Now, I take profits, get out of the trade. Price comes back up to open print, where you can see we get that congestion there at open print, right? Look at that. So back to the 5 minute here, because this is really, so the old Josh used to see this, the chart on the left, right? Let me make it bigger. So when I seen something like this, I'd be like, oh dude, this is getting bullish. I should long this, right? That's what the old Josh used to do, right? And then this would happen. And now I have to ask myself, right? After doing this over and over again, I would be like, okay, what do all of these have in common, right? Looks like a break of structure. It's quote unquote, buyers are showing acceptance at open print, right? Why not long this, right? And then once again, you whip out that 1 hour time frame, it's telling you a completely different story. We're below the 9 DEMA, right? So like I don't long until there's acceptance above this blue line. I don't short until there's, you know what I mean, until we cross below it, right? So when the market looks something like this on the 1 hour, I can't long that. I won't, right? Like I will not long below that blue line, right? And so what I'll do is instead I'll watch this chart here on the left and I'll be like, okay, if buyers lose this, I'm getting in short, targeting low of day and targeting downside targets, right? So once again, because I used to be the buyer that would get stomped out here. So now instead I'm going, if buyers show strength here at the 50 and then lose it, I'm getting in this bad boy short, right? And you can see that we drop right below the 50. We come up, we retest the cloud. We couldn't close above the 9 DEMA, right? You can see we try, right? Take the market short on this candle right here, right? I'm shorting this candle when the market looks like this, just so everyone knows. I want to be clear with entries because it's very important. I'm shorting right here, right? Because we got the red bar. We got price going down below it. I'm short. My stop's above this red bar, right? Because I don't want price. If price pops up above this red bar, then my trade's invalid, right? So I have risk, I have downside targets, take the market short, got a really nice push, almost got stomped out here. But once again, I'm not, it is what it is, right? And stop was probably like right, I would probably put it right at the bottom of that candle. So 55887. I'm risking about 40 cents here to play in the low of day, right? Where I took price, came right down. Look how extended we are from the blue line, right? So I'm taking profits once as we're selling off in the low of day, right? So nice little pop down there to the downside. And then look at the fake out below low of day, right? So those are my two trades on Tuesday. Is that Tuesday? I think it was Tuesday. I really felt really good about that trade in the morning, though. I really, really like that trade there.
I had a question about the 9 on the hourly.
Yes.
So I also look for if price is extended to guide me. If the bar, so if it's still within the candle, like the current hourly candle we're in, if price is still inside that candle, even though it might be like well above or well below, do you still consider it extended, or does it have to be like outside of the current candle? You know what I mean?
So are you saying? So obviously, right? You're saying like this candle hasn't closed yet, right?
Yeah.
What do you do, right? What rules apply, right? Because it possibly could get above it. And then that's where, so basically what I'll do is I'll look at this candle, right? Like it's green. It's within the previous candle, right? This is where I'll go, are we above a critical level? Are we above open print? If we're above open print, different story, right? Like that's where I'll kind of use my critical levels. I'll use other tools to gauge the strength, right? But if we're not yet above, and also look at this. This is actually a really good example. Look at this low, right? So this 9 o'clock candle, the low is right here at 55909. The open, right, open print is right around 55950. So I want to see how, like if this candle was above that critical level, then, and say it still had like 20 minutes left on it, then I would play into the highs, right? I need a little more to understand that buyers actually want it, right? So I hope that kind of helps a little bit, because we do get a lot of times where we get very extended. I think the next trade is a good example, or maybe it was Friday. But when we get very extended from that 9, the cloud could be red. There's trades that I actually play back into the 9 on the 1 hour, right? So like,
right.
I don't like being necessarily, I shouldn't have said earlier, if we're below the 9, I won't long, right? Because there are times I do, right? It's all like, because that snapback I talk about, that's a really good way of trading, right? Like you'll find really good setups. I think the next day is one. Let me see here. So that was Tuesday. Wednesday, my first trade was a losing trade. I want to show you guys exactly where it went wrong. So price is playing around with 563.7. We rally above it, right? I was not in any of this. Looking back, it was a beautiful play here off open print on this 1030 candle. But I didn't long this. I was just sideline waiting to see what happened. It was kind of choppy. I don't know if there was news. I think there was news this morning as well. But for whatever reason, I was not in this long. We got a glorious move to the upside, and then the snapback happens, right? So the snapback is when you get extremely extended from the 1 hour 9, or from, a moving average, right? I mean, look how extended we get. We rip all the way up to 562 right here on that right-hand side chart. And this helps me so much not chase overextended trends too, right? Because obviously when you see something like this, our first initial thought is, oh, dude, this thing's going to rally today. We got all-time high up here at 565.15. Buyers are here. We're going to catch a glorious move up into the highs, right? Like, that's what I think every time I say. It's like, it is what it is, right? Whatever. So what I'll do is I'll be like, okay, there's high of day. If I could get a nice retest here off the cloud, I'll possibly play long, right? Because I've programmed my mind to always trade with trend. So it's not necessarily a bad thing, right? But then once I see something like this on the left-hand side, I whip out my 1 hour. And I go, okay, how far are we? Oh, wow. We're literally $2 away from the 9. You know, because this candle will be green. It'll look something like this. Let's see if it'll let me do it. This will literally look like this. Kind of, right? It'll look something like this. Right? And I'll be like, dude, we need to long this, right? And then the blue line will be up here at like 560, right? And I'll be like, well, we're really extended from the 9, right? So for me to long this, I need to see some sort of pullback, right? Let's see a pullback into the cloud, go from there. And the snapback happens, right? You get the snapback, boom, the violent sell-off, the rug pull, and then we break down, and now watch the 9 here, it's so important. We got open print right here at 55976. We break below the 50, we close below the 50, now we're retesting the 50. So I'm like, dude, I'm in this short, I like the 1 hour, I'm looking to play down to previous day low, which is down here at 557, right? So I'm like, okay, this is going to be a great short play. Let's go. But look at the pocket here. This right here. You learn to see these. You will not only avoid bad trades, but you will capitalize on great liquidity grabs, right? So look at the gap between price and the 9, right? This is what I call the unhealthy relationship. This is what you do not want to be entering short on in this scenario, right? You do not, like with this pocket between price, the 9, the EMA cloud, you don't want to short this, right? I shorted this, and you could see price started to sell off. I was like up like 20%, 30, like 20 something percent, but I didn't take profit. I wanted to make the move down, and the snapback happened. Whoop, snapped right back up, right? So once again, learn to spot these. If you learn to spot these gaps, you won't enter this, right? You'll be like, I'm going to wait. And then you're going to avoid a lot of losing trades. So that was my first trade of the day. I ended up stopping out of the trade for around 25% loss. Another reason that wasn't that good of a trade is because look how far away my stop had to be. My stop loss had to be at open print, right? Because I mean, it didn't have to be, but that's where I wanted it. Because, you know, I wanted to make sure I stayed in the trade, gave it room to breathe. I wanted to see if those sellers were going to defend it. So I enter short here around 55920, and my stop's at like 55974. You know, that's about 55 cent stop loss. Not the worst, but, you know, felt like I was kind of forcing it. So I took the L, took it right on the chin. That's completely fine. And then price then comes down into pre-market low here, and buyers show up, right? So there's a couple things I like here. One is that sellers couldn't hold low of day, right? Sellers could not hold low of day here. We fell off below it, and then we immediately closed back above it. We close above the 50 right here. Right, and now we're coming into open print. I don't want to long right into open print, but I want to find that acceptance. We get that EMA cross, right? Price comes down, and on this candle, when we pop the top, I'm in this long. And first target is pre-market high. Actually, what was my first target? Yeah, right there, 560. Well, my first target was this guy, 563.5. And then my second target was this little left shoulder right here, right? So we ended up catching a really good move on SPY. I think I was like 90% return on this trade, right? And it's crazy, right? Like that's all it takes right there. That's literally all it takes right there to capture a glorious move, right? Like it's not pretty, it's not, you know, like extravagant. It's literally just playing strength off the 50 right there. Off the 50, off the critical level, understanding the story. Like, that's what price looked like when I entered long.